And we're live. Thank you.
Okay. So good morning, everybody, and welcome to the Daily Energy Markets podcast. Today is the 22nd of May, 2025. My name is Nader Itaim. I'm the Mideast Gulf editor and Dubai bureau chief for Argus Media. I am standing in for your regular master of ceremony, Sean Evers. Uh, Today we have Brent crude holding it just below $65 per barrel in early Asian trading. It's largely on par with Wednesday's close. Oil prices have generally been quite steady over the past 10 days, 2 weeks, with Brent kind of holding for the most part within that 64 to $66 per barrel band. So as ever, I thought we could spend maybe the next half hour or so discussing not just some of the latest headlines, but maybe some of the kind of ongoing issues impacting markets. So we'll touch on the geopolitics, US, Iran, Russia, Ukraine. We'll try to touch on obviously production policy, OPEC plus and such. And of course, the good old fundamentals, China, India, and more. So joining me today, I am thrilled to say, are Rad Al Qadri. He is the managing partner at 31032 Associates. We have Vibhuti Garg, director for South Asia at the Institute for Energy Economics and Financial Analysis. And finally, we have Brian Pieri, the founder of Energy Rogue. Welcome, everybody, and thank you so much again for joining us today.
Good morning.
Morning. Good evening for you guys. Brian and and Rod are joining us in the early hours of the morning, so a special thank you to them. So I thought we could kick off the conversation with basically around reporting that came out just a few hours ago. Essentially, it was a follow-up to the CNN reporting around 24 hours prior that Israel is considering, targeting Iranian nuclear sites. Now, this latest reporting it's essentially saying that the preparations are being made in the event that the ongoing, discussions between the U.S. and Iran collapse. I think the initial story didn't have that kind of caveat in there, so that there's some movement on that front. Apparently, the Israeli intelligence community feels that the chances for a collapse are now considerably higher than they were just a few days, maybe a week ago. So, Rad, if I could start with you, I mean, essentially a broad question here. How do you see things progressing on this particular issue? And do you have any thoughts really on whether you think the talks will actually materialize into some kind of a new agreement, whatever that may look like? And if not, any thoughts on these kind of noises out of Tel Aviv? Is this something that is realistic, or is this more kind of empty bluster?
Look, it's great to be here, so thank you. Look, I think as you start, is it realistic? Yes, it is realistic. Is there a threat of conflict in the Middle East? Is there a threat of Israeli attacks? Absolutely.
Mm.
I think in terms of the talks, where we've gotten to is a position now, sort of we've been through 4 rounds, and it's down to it's down to sort of detail, and the devil was always going to be the detail in terms of these conversations. There is a willingness, I think, on both sides to reach an agreement. It's what that agreement looks like and whether there's common ground between them, and particularly over the issue of enrichment. The US having sort of begun the talks being not ambiguous, but certainly seemingly flexible, is now landing on zero enrichment. And obviously, we had statements out of Supreme Leader Ali Khamenei sort of saying that there wasn't going to be a deal if zero enrichment was the issue. Now, I think the Iranians have an incentive to make a deal, and there's a willingness there, or these talks wouldn't have started in the first place. The US certainly wants a deal. But I think where we're actually getting to is one of those points that was evident at the start and wasn't clear how we were going to get beyond, which is not just the detail issue, but the timing issue. I think what we've seen with the US on Ukraine as well has demonstrated that the Trump administration has a limited attention span, or at least the president has a limited attention span, limited patience. And if deals aren't going to be reached, this administration is willing to move on quite quickly. and moving on quite quickly is going to, raise the risk of attacks on Iran quite significantly. No one, I think, in the region wants that outcome, beyond possibly the Israelis. But I think, the risk of conflict if these talks break down and if the timing and the details issues start to get in the way is very significant.
Hmm. Absolutely. I mean, Brian, you're also in the US at the moment. I think one of the things that struck me most when I'm following this particular story, I think Rod touched on this, but it's really unclear, at least from the US side, where this red line of theirs sits, particularly on this enrichment issue. It seems to be flip-flopping on an almost daily basis, depending on which administration official you're talking to.
Sure.
Now, I wanted to understand from where you are sitting at the moment in terms of the community that both you and Rod are in at the moment. What's the mood music there around? Is really the idea of lifting of sanctions, is that something that's actually realistic amongst who you're both speaking to or you're particularly speaking to? Should we really be considering the potential for additional Iranian barrels in the short term, medium term? So
Sure.
yeah, what do you think?
Okay, fantastic question and fantastic way of leading into the equation. Something that I typically lead into when when we're talking energy and geopolitics comes up is something that I've often said, which is when I grew up, I did not want to go into politics, but unfortunately, I chose energy. So here we are. Politics and energy are very much intertwined. And one of the things that I typically look at is not necessarily what people are saying, but what people are doing. And by people, that could be countries, that could be companies, so on and so forth. And as Rod mentioned, I think the U.S. is very incentivized to have some de-escalation in the region because there is a motive of this White House administration to lower energy prices, which energy prices have been done probably not because of anything except for upheaval and havoc on tariffs and a lot of uncertainty alongside some bearish fundamentals. But when we pull back the curtain and actually take a look at the sanctions that already exist on Iran, is when we look at that, if you go back to pre-COVID, pre-sanctions, what was Iran producing and actually exporting into the marketplace? They were roughly producing about 3.8 million barrels a day. Well, under sanctions, they dropped. Under sanctions and COVID, they dropped to about 1.8 million barrels a day, which matches their country demand. So the sanctions, COVID, really undermined a lot of their productive capacity. Well, what's happened since then, from 2021 to today, is they've built back to 3.5 million barrels a day. So a deal doesn't necessarily equate to an extra million barrels a day. It probably equates to a couple 100,000, maybe 300,000. A deal de-escalates the tension in the area, which is definitely a motive for this White House administration, or at least I should hope so. A de-escalation of tension, war. I'm call me an optimist, but I wish there was no war, no conflict, because it just impacts people's lives in a very negative way. As a matter of fact, last year when I was at the Gulf Intelligence table, it was right when an attack came into Israel, and one of the people at the table, they said, my family is in Tehran right now, and they were worried about strikes, and it's like this impacts people's lives. So
I remember that day. Yeah.
Yes. I mean,
was probably in the same room as you. It was a tough day.
It was very, but it really hit home to have somebody right next to me, and they're worried about their family, because that's an important distinction. But when we get back to unwinding, what does that mean for the oil markets? I think it doesn't mean much in terms of supply. I do think it is going to have impact on the price because there's
Mm.
going to be a sentiment impact. But from a fundamental supply and demand, it's not really going to add more supply. There's probably more attention on Saudi Arabia and whether or not they are going to release more barrels into the market on the second half of the year, and then watching what's happening on the Chinese side, because the tariffs and demand are both in question, and that really puts a lot of question marks on demand. So ironically, I'm watching more about the demand side and what Saudi Arabia might be signaling into the marketplace. So that's a little bit of my thoughts on that. Thanks,
Got
Nader.
it. No worries. I'm actually going to get to the demand side of the equation soon. I wanted to touch, I mean, today is the 22nd. We have an OPEC Plus meeting in less than a week, so 6 days. And typically, this final week and run up to an OPEC Plus meeting is silly season. We start to hear all kinds of leaks in the reporting. I'm part of the problem, so I apologize to everybody. Now, essentially, I think the question marks, I'll have to say, I'm not entirely sure whether the 29th or 28th of May meeting is when we're going to hear what the OPEC 8 is going to do. I think it's possible, it's unlikely, but I think also typically the way they've been operating is to announce this at the beginning of the prior month. So possibly we could wait until early June to hear what's going to be happening. But assuming that we might hear something 29th, I just wanted to sort of open it up to the floor first. Vibhuti, if that's okay, I'll come to you first. In terms of, I mean, first thoughts before we go into any discussion around, what's involved in this decision making. What's your gut sense here? We haven't heard any leaks yet, I don't think. So, I mean, what do you feel we could be seeing from this group of 8 when it comes to deciding for July? Is it another 3-in-1 hike? Is it going back to the original plan? Is it something different?
I think with all the geopolitical tensions that we are seeing and the volatility around, energy demand, energy prices, I really feel I think there will be a lot of pressure to control prices because so many different countries are actually may have come out of stagflation, but inflation, along with, the economy is not growing to the extent they would want to see. That's a real problem.
Mhm.
So it not only impacts the supply countries or the demand countries, but even the supply countries, because we are seeing some level of dwindling oil demand. So if we are going to keep putting a pressure on high prices, it's not that the demand will not find alternatives. I think we are clearly seeing that, and that's why there is a lot of diversification happening in the parts of the country who have been traditionally being the oil suppliers, because they know their profits are going down, their demand is going down. So I feel my gut feeling, I would say, is the prices may rise a little, but not to the kind of $100 per barrel, the kind of prices which we have seen in the past. From 65, it could possibly move to 70, 75 with some restrictions. But I think beyond that, they know it's going to further impact the supply and the total demand. So I think we won't see very, very high prices going forward.
Okay, in terms of the decision to actually kind of, do you think what do you think OPEC Plus will, in terms of July, do you have a sense in terms of whether they would actually bring on around 130,000 barrels per day versus that 411 they've been bringing? Do you have a sense on that, or you still think it's too early to determine?
I think it's too early to determine.
Okay,
So
fair enough. Fair enough. Rod, can I throw that to you? What do you think we should be expecting?
No, absolutely. I think there's a risk that you get another super hike as they go in. As OPEC, I think is, and certainly core OPEC is looking at sort of the key the issues that sort of matters the most. You've got the discipline is a little bit better. And you've certainly seen sort of slightly improved discipline from Iraq, but there is still a discipline issue that's been on their minds. It is potentially eased a little bit, but not gone away. And I think also OPEC is still looking at what it sees as strong fundamentals, particularly sort of on the stock side, where sort of global storage and global stocks are at the bottom of 5-year ranges, and therefore there's opportunity. This is not a market that is yet to get sloppy. And I think under those circumstances, going into the driving season in the US, going into a period of traditionally sort of strong demand, there may be an incentive to try and add more barrels again, in part as a message to the various parts of OPEC that have been sort of more delinquent, but also to take advantage in terms of market share at this price. It's been, for all of the barrels that have been brought on over the past, and the decisions that have been made over the past couple of months. I mean, you've still seen prices, as you mentioned at the beginning, stubbornly sort of bouncing around the sort of mid 60s. And if there's an ability to capture more market share at that price, and particularly if there is a perceived upside in terms of geopolitical pressure, then I think that OPEC will perhaps err again on the side of using this as an opportunity on the market side, and push ahead with some of the more aggressive output increases.
Brian, last but not least, what do you think?
Well, I do think Rod and Vibhuti made some excellent insights and points. And as Vibhuti was talking, there's not much optimism in terms of price, mainly because of supply and demand fundamentals. When we get into the demand side, this is certainly in the calculus of OPEC and OPEC Plus, and particularly. I mentioned before Saudi Arabia and not OPEC or OPEC Plus. It's because they are carrying the heavy burden of most of the output cuts. And so they are doing the heavy lifting. And when you put it through that lens, they are making a very measured decision. And one of the things that I've always admired about their approach is it seems to be very forward looking. The only times that it wasn't is maybe at the price war with Russia right before COVID. But who saw COVID coming? Nobody saw that coming. It came out of the blue. But then they reacted very quickly and really reconciled a lot of the marketplace when you look at that impact on the business. And what's phenomenal to me is when we look at a global crude oil market that oscillates somewhere between 104 to 106 million barrels a day. And then you have an output cut that, for all intents and purposes, I mean, I know I've seen 5 million barrels a day, but probably matching that to historical production, it's probably closer to 2.5. So it's amazing to me that under 3% of a supply has a significant impact on the price. That just shows you how sensitive the supply and demand balance is. And one of the difficult matters or difficult factors is dissecting what demand means. For instance, yesterday in the US, we had a bearish crude oil stock addition. We added stocks to crude oil, but nobody's watching that distillates are about 10 million barrels off on the inventory here in the US. That means that the underpinning of distillate demand in the United States is pretty healthy. So so when you look at the demand, it's important to look beneath the surface, because many people look at just, say, the stock level of commercial stocks. We typically try and take a look at the products, because that's really what we're talking about. What does jet look like? What does distillates look like? What does MoGas look like? And one of the things that we've seen creeping up is jet inventories, which might indicate some challenges for airlines. They may have a lack of capacity later this year in terms of reduced takes on the jet fuel, which means airline travel may go down. But the distillates are looking pretty strong. So wrapping this up is, I think, the decision and the meeting upcoming. I'm curious to watch. I don't see a large incentive for OPEC, OPEC Plus, or Saudi Arabia to keep many barrels offline. You might as well rip the Band-Aid off because there's not, they might not bring it on all at once. It's probably going to be phased in throughout the remainder of the year.
Right.
But when you put in the calculus of bullish and bearish, the only bullish factors that you can really manufacture are going to be geopolitical conflicts and geopolitical wars. And that doesn't spell a healthy supply and demand. But for all intents and purposes, I think they might as well rip the Band-Aid off.
Okay, gotcha. Vibhuti, I'm gonna shift back to you, but before I do, can we have the question, please? The question of the day, the survey question. So the question here is essentially, since we're talking about OPEC and OPEC Plus, how likely is OPEC Plus to maintain unity if oil prices do fall further in 2025? So A, you have very likely, B, somewhat likely, C, unlikely, or D, not at all. So yeah, so for those watching, if you could just make your selection, and we can look at this in a few minutes time. So what do I think here? Okay. All right. So Vibhuti, we're talking about, I mean, the conversation naturally kind of flowed into the fundamentals in terms of oil demand in particular. That's really been, as far as I'm concerned, again, it's likely to be the most contentious and sort of difficult side of the supply demand question to decipher here. We're seeing, again, a fairly significant divergence from OPEC and IEA in terms of what to expect this year. China has typically been kind of that main focus when it comes to the demand, oil demand and oil demand growth every year. But it appears that now all eyes seem to be focusing towards India as this kind of new driver. If I'm not mistaken, I think the general kind of consensus estimates around India are maybe around 300,000 barrels per day growth this year. Now, I'm curious, where would you think, if we're trying to look ahead for the next 5 years to the end of the decade, I mean, how do you explain kind of what's likely going to happen to the oil demand growth story in India for the next 5-6 years? I mean, obviously also taking into consideration that there is a decarbonization push in the country that I know, the leadership or the government likes to talk about quite
Right.
strongly. Go ahead.
So, as you rightly pointed out, there is a strong push for decarbonization in the transport sector, at least for the land transport. There are definitely a big push for electric vehicles. We are seeing increasingly adoption on annual basis, and the numbers are very encouraging, especially for two-wheelers and three-wheelers, four-wheelers, in the car segment, both for commercial as well as passenger car. Things are picking up, but it's taking time because the infrastructure that is required for EV penetration is not that well built, the charging infrastructure. So that kind of confidence, both from the consumers as well as the OEMs, is happening, but it's going to take a few years. So definitely for land transport, I would say there is a bigger push, but yes, there is an increasingly demand for more routes with better, capacity to spend. We are seeing that a lot more air travel is also happening, and that still is going to be a big driver. So while on one hand, there's more alternatives, and given the drive from the government, there are a lot of policy support as well as budgetary support given to push penetration of electric vehicles in India. But as I said, there is an increasing demand for air travel, which might still keep the demand going up.
Mm-hmm.
So that's where the balancing act will happen. And while I've always in the show kind of said that I feel that oil demand will definitely go down, but probably I was speaking it from the perspective of only the land transport. But what about the other modes of transport? That's still going to be a big bullish kind of a driver that's gonna keep the demand up.
So do you think we could actually get closer to the 500,000 barrel per day mark over the next coming years?
I think we will be hitting that mark.
All right, good to see. So if we could shift back to supply as well a little bit, the supply of the conversation. Brian, I'll try to keep it brief because we're running out, and honestly, I'm enjoying this. I wish we had a lot more time. But Brian, if I could touch on, we're looking at prices obviously being in the 60s. Okay. If I could ask you, where exactly does this leave the shale industry at this point in time? Because if we're going to expect another addition from OPEC Plus, a sort of a mega addition, we could see prices dip to, I don't know, I think after the last decision, they briefly dipped below $60 per barrel. Who knows what's going to happen? Um, where exactly does this leave the shale industry at this point in time? I mean, are we in good territory? Can they manage? Or
Let's put it this way, is last year we obviously had a much higher benchmark on crude oil. Crude oil
yeah,
prices were a lot higher, and with the volume of rigs, with the volume of production, we added I think a couple 100,000 barrels in that marketplace. One thing to bear in mind when we look at supply is the US just released numbers on Wednesday, and it was about 13.3 million barrels a day. It might be 13.4. I forget what the rounding is, but 13.3, 13.4. Every single month, because of the nature of when shale came online, every month the U.S. has natural decline of roughly 600 to 700 million barrels, or 700,000 barrels a day. So 600 to 700,000 barrels a day disappear if no new production is brought online. So
mhm.
if you think about that, if all productions, if all drilling activity stopped today and new production went offline, I mean, over the course of the year, you're going to have a dramatic fall in production. But we are adding production maybe 20, 30,000 barrels a day. That means that the economic engine of adding 600 to 750,000 barrels
Mm.
a day of new production has to stay online. Last year, it was only able to carve out an additional 20, 30, 40,000 barrels a day. That meant the economic engine was there at a much higher benchmark to add 750,000 barrels a day of new production each month. Now that we're at 60, we're already starting to see rigs drop, not dramatically, but they were already dropping from last year. And last year we were already what I consider treading water. So I
Mhm.
see that continuing, and I would be stunned if we exit the year above 13 million barrels a day. So
Wow.
that's my opinion.
Okay, interesting stuff. Rod, I know Iraq is a country that you've followed quite closely over the years. So, if I could bounce to Iraq very briefly, uh, this is not a particularly, it's not an issue of the day per se, but it's an ongoing issue. I'm curious where you see this KRG oil export issue. Are we ever going to see these barrels return to the market? I mean, we at some point it was a today, tomorrow, next week, they're meeting. Things have gone very quiet. So I'm curious, do you have any kind of view on where things are with the KRG or exports from the KRG at this point in time?
It's a fundamentally political question. It's it's
Mm,
it's not a technical question. It's not a production question. It's all about the politics between Baghdad and Erbil,
yeah.
between the central government and the KRG. And at this moment in time, those discussions are pretty tense. You've just had the KRG Prime Minister in Washington, doing a very high-profile tour that's been designed to emphasize KRG autonomy
Mm,
and close KRG relations with Baghdad, almost at the with Washington, almost at the expense of Baghdad's, and obviously statements by Secretary of State Rubio sort of calling and saying, that the issue of exports is there. I think as we get the closer we get to elections, um, if we don't have a breakthrough relatively soon, the closer we get to elections, which are due in November in Iraq, the temptation is going to be to keep these barrels off the market, just simply because they become a political negotiating tool for government formation afterwards. And I think, a hope both on the Baghdad side or an expectation on the Baghdad side and on the Erbil side that somehow the elections may change the political balance of power fundamentally. I think that's unlikely, but that doesn't mean that the politicians won't hold out for it. The wild card is really the Trump administration, as it is with everything in the Middle East and arguably everything globally. I think Baghdad in particular is worried that, the sort of back end or one of the consequences of this latest trip by Masroor Barzani is going to be renewed pressure and balancing that, or at least to sort of in parallel with that, threats of sanctions against key figures in Iraq and key figures in the oil ministry, and that may be an incentive to try and maybe an incentive for Baghdad to make some of the compromises that the oil companies operating in Kurdistan want. But right now, I think Baghdad can live with the balance as it is. The Kurds will make a gamble on the balance as it is, and that, absent again an external factor, will probably keep barrels off the market.
Yeah, interesting stuff. It's good one to watch. I had one more question, but I just want to see, do we have the results of the survey question? If you could have a look. Okay, so we have a clear winner in B, somewhat likely. So how likely is OPEC Plus to maintain unity if oil prices further? B, somewhat likely. Okay, that's fairly positive. In the second, very unlikely, and last, not at all. So thankfully, it seems like generally people don't expect OPEC Plus to collapse anytime soon. If I have a minute, I just want to give the last kind of word to Vibhuti. If we could just touch briefly on Russia, Ukraine, the situation there. We saw the EU announce another package of sanctions yesterday, independently of the US on Russian oil. Now, this does come just as India seems to be ramping up its own imports of Russian crude. I saw that basically imports of ESPO were their highest for 10 months, or are likely or on course to be highest for 10 months in May. Just briefly, I mean, where do you see this having any impact on Indian buying, or is this likely to continue? Or, I mean, could we actually see a change in the government's stance based on this and any further sanctions that come into place?
As of now, maybe not. India might continue to buy from Russia unless the situation really turns drastic and there are a lot more tensions. I think the kind of crude oil, the light crude oil India wants for its refining capacity, I think Russia is able to supply that. And given India, Russia has always had very strong relations as two countries. So my sense is the trade will gonna continue.
Okay, good to know. Well, we've come to time. We've gone a little bit over, but thank you guys all genuinely. I've really enjoyed the conversation. I hope you did as well. And thank you everyone for listening in.
Thank you.
Thanks so much.
Thank you.
Have a great
Take
day.
care.